always have a plan to stay tough. This life ahead of you ain't easy, it was built to be rough. But that's what makes a personality, is tragedy, bruh. So keep your head on your shoulders. Now we ain't out here moving rocks, we out here moving boulders. Now we ain't getting posterized, we out here making posters. And we ain't got nothing to hide, we move forward like soldiers. You better wake up for the pay stub, or you'll pay up. Don't make love to the game, bruh, fuck the game up. Change up, rearrange stuff to your greatness. Famous for the way up, play the game, bruh.
Never stop, I'll get it if I want it. Gotta make to myself a promise. I won't quit, keep going till I got it. I won't give up till I'm on top, yeah.
You know I'm always honest, there ain't no way I'm ever.
Hello everyone, hopefully this is okay in terms of, sorry about that. I just might up the gain a little bit. Okay, I think that's about all I got at the moment. Push on anyway, hopefully that's high enough volume. All right, it's been a while. Sorry, I have been absolutely flat out since the last one. I have still been posting in the Discord. If you're not in the Datapedia Discord, it's a good one. I don't run it, but I help them out with some analysis. And they test trading bots and stuff. So actual raw hard data on trading bots, it's quite good. Okay, I'm going to make this fairly quick still because I still don't have a lot of time, but I figured given it's a long weekend, it's not a bad time for an update, because obviously we got the drops that we thought would happen. Took a little bit longer after the last one, but what I've been looking at recently is just some anchored VWAPs over time in particular. So sorry, this looks a bit cluttered, but tend to look at an anchored VWAP from previous high and from previous macro low. And when I went back and had a look, I don't know if I've got it. Oh, yeah, it might have been this one. Yeah, okay. So when I went back and had a look at the data going back a fair way, previous cycles did come back down and sort of retest the VWAPs from previous lows and previous highs, and those two things actually came together reasonably closely. So it actually dipped below those levels on the previous cycle, and that was the FTX crash at the end there. So, you know, at the moment we'd be looking at basically one of these VWAPs would be the same sort of level that it was sitting at before the FTX crash. So those levels are effectively between about 48,500 and 58,300. Now, Bitcoin is different now. It's not trading the way it was in prior cycles that were sort of driven by retail and FOMO and a whole heap of liquidity in the system. It is trading differently. So it is worth remembering that. But they still seem to be pretty good targets around here. And in particular, I'm actually looking down in the low 40s as potentially being the next sort of wick bottom. And that would kind of play out a little bit as well. You know, we look at the last drop, you'd expect something pretty similar, maybe even a bit more capitulation. So at the moment, I'm actually, and I'll get to why later, but I am expecting a little bit more of a bounce. I don't think we'll get up to here. 86 is sort of a very upper limit, but it is certainly possible to get up to this level before we drop again. But we're sort of teetering on the bottom of this wedge at the moment. And if we did fall from there, you know, it's not a bad target some people would actually look at potentially something like that as the target drop, which would bring us smack back in the middle of this, back down into this wick here. And sort of the low 50s. I think it'll go a little bit further than that, but you know, that sort of region is what I'm looking at. The other thing is the volume profile. So right now we've had a lot of trading around this level. It's pretty much the highest volume across the history of Bitcoin, I think. So very strong level here in terms of volume, and we just keep getting attracted straight back into that level. Sorry, I want to make sure I try not to get things off screen, but yeah, realistically, I think this in here, if we do reach that, is a pretty good level for a sell-off. It is an increasing volume area, so it could potentially stay in there for a little bit as well. But realistically, if we do break this falling wedge here, then that's your target. This could go sideways and across for another couple of months too. It's not a guarantee that we get any sort of breakout anytime soon, and we could end up just putting in more of a longer bear flag until we hit that, and then we could come down. Okay. So no guarantees on anything there, but there is a little bit of a sign that we could be getting a dead cat bounce at the moment on markets. So I am still leaning bullish at the moment, just in the short term. And overall, I still think there's going to be a bigger crash down the track. So I think just from a volume perspective, somewhere between these two little volume nodes here for the next drop, if we get a next drop, somewhere between those two, I think is a good target. We probably will get a bit of support around the 57 level, just because of the volume drop off from there. It is a value area low based on that 40% level. But if we stick above this value area high as well of the 40%, then you know, a retest of that and move away will probably get us back up into that 80 to 85-ish area. I have accumulated a little bit down the bottom here. It's not a bad accumulation level, but I'm sort of saving a little bit for later on when we get down into this level. There is a third target here, which is another volume level, just a longer volume profile that we're looking at. And I think that would be worst case. I think we'd need two legs to get down there. I don't see it going straight there at all. But that would be sort of the capitulation level, I would say, somewhere around the 27 again, which is actually pretty close to the bottom of the last market as well. Just remember that we did sort of, in previous drops, we have seen quite a bit of sideways, and then it just sort of fades and then drops again. So kind of looking for that fade. It does look a little sketchy at the moment for that, but not quite convinced that that's where we're going yet. So, and then periods after that were kind of shorter. So, and interestingly, this was sort of the April-May region in 22. April does have a bit of volatility in the overall global energy system as well, but that's only a couple of months in there before the next big drop. So we want to be seeing this sort of structure, and we kind of are at the moment, to be honest. We're kind of seeing a bit of this area now. Obviously, we still got that FTX crash, so you still got to be careful. But I don't know that we're really going to be doing something same as what we've done in the past here. That's sort of what I'm not going to rely on the past for the future, even though when I did previously, those that were around when I did this analysis, where we looked at just the time between peaks and troughs and bottoms and tops and stuff like that. It turns out this 1057 bars was pretty spot on for the top. That there was 1057 bars, I believe. Yeah, like nearly to the day of when we topped. So the cycle kind of still does look alive, but it's Bitcoin has been trading very differently on this move up. Now that Wall Street's involved, I expect that to continue to change. Okay, I'm just going to slot in some other charts here and some of the web stuff. So we've actually got cumulative volume delta has been increasing through this bottom on the futures. Actually, that might be everything. It doesn't actually say futures there. I thought that was futures, but so futures must be pushing it up though, because spot volume is actually still low and down. So spot volume's not really showing us anything in terms of cumulative volume that would suggest we are going on a big pump at the moment. There is a bit of a lack of interest of whales out there. Open interest is kind of increasing a little bit, but this is shorts and longs. It's not just longs. So just bear that in mind. Some interesting levels here on the hyperliquid liquidation map as well. So I think if we do drop again and have a big drop, if we clear this 64 level, I think it'll probably break through this pretty quick. I don't think 58 is really going to hold it up. Might be a little pause, but I think we'll get back into these areas, and that's sitting at 51. It's this one here, that the increase here, that I think between about 42 and 47, I think that will give us our next bench, the next pause. And then just down here is that 30,000 level. So I think, again, that'll be pretty capitulation level down here. On the way up, there's around that 70k, we've still got a bit, and I think that's why we're getting so hard to get through some of these levels. There is a fair bit of selling pressure coming through still once we pump, and then we're up into the 79s and 80s into this area, and there's not a hell of a lot above that really. If you're just looking at this, you'd expect the market maker to actually maybe go a little bit up, but then want to come back and swipe this if it can, just to get volume, basically. So, yeah, and then obviously we got up here around 105. I'm not expecting that anytime soon. And this level here around 83 to 84, I think that's probably going to be a pretty good level. But once we start moving up, there's going to be a lot more come into the charts up here. So these levels will change quite a bit. There is a fair amount of open interest compared to the market cap at the moment. It did drop off a little bit in the last couple of days. I think everyone just starting to pull out of the market going into summer in the Northern Hemisphere. Typically, you don't drop when you're in a big red whale index as well. When you're in the big red numbers in the whale index, it tends to be more of a basing structure. I'd like to see some yellow before we actually drop off. It's not a guarantee that you will get that before we drop, but at the moment, just based on that, I'd say that's more bullish than anything. There is quite a bit of liquidity below. We look at this this sort of liquidity block in here compared to what's above. That is an indication that we may go lower. Now, there's been plenty of long interest pretty much the whole way down, to be honest. So there's been lots of orders in below price for quite a while now. It doesn't mean too much when we've been going sideways for so long. But there is some decent volume, at least up to about that 80K level at the moment. So at the moment, that looks like it's going to be a pretty hard ceiling. But again, once price starts to move to that, you do get bigger trades and stuff coming into the chart. So just one to watch out for. But at the moment, this would be, just based on this chart, I'd be leaning more towards the downside to pick up a little bit of this volume in here, liquidation volume, before moving to the upside. So probably potentially up to the 80K mark. That's not a bad level over the next few weeks, really. Quick look at max pain. For this week, it's still sitting pretty low. It's still sitting around the 67, 66 and a half, 68. No major drop-offs in this. The volume isn't huge, so I'm not really expecting this to drive price too much. Maybe until the end of the month, so 24th of April has a pretty big value to the options, 6 billion roughly. And the max pain at the moment for that is at 70K. So at the moment, this is suggesting that over the next few months, probably more chance to the upside than anything, up into that 80K level. But that's literally out to, what's that, June, end of June. So a few months. But then it is suggesting a little bit of a drop off from that. Just another thing to keep an eye on, which could be useful. First, I wanted to have a look at sentiment as well. So the sentiment index, dumb money is quite low. It hasn't really capitulated like we got over here yet, and that is a concern for me. It definitely doesn't look like we've got a major low in yet. And then we've got smart money hasn't actually peaked yet either. So at this stage, just based on sentiment, I would say there's still room for more downside, and that this would look like more of a dead cat bounce than anything at the moment. Technology, what's it doing? Yeah. So technology, this over the last year, obviously tech had a decent run up. There has been a lot of volume, a lot of big dark pool trades, a lot of big just normal trades across the top here, including the number 2 trade sort of as we were coming down from the peak, and we have sold off more since then. We're in a level at the moment that is fairly highly traded. Like there's a fair bit of volume that's come through this level in particular. So it is probably going to be a fair amount of resistance at the moment. If we break through this, there could be a bit more upside, but I'm not really expecting it to be any sort of breakout from previous highs at this stage. So that's probably, short term might be positive, but long term I still see more downside potentially into this level in here in particular, around 110, a bit over. Been some big trades all the way down on financials. Financials have been a pretty shitty looking sector for a while. It did have a little bounce, but it's already struggling at the bottom of these sort of volume areas. If we get a quiet couple of weeks, I would expect this to creep up more into this level here and retest this breakdown from this previous low. Sorry, getting used to these charts. They've changed it on me. But yeah, decent volume coming through on the way down. It could be like CTAs getting out of positions that have been in them for a while. Certainly we've seen a couple of buys here. Which have led to sort of short-term pumps, but I think at the moment it's not. These aren't really supporting the market by the look of it. Not a lot anyway. Utilities is still going reasonably strong, and utilities is a defensive sector, so that tells us that the move is still defensive posturing at the moment from markets. No big volumes on this dip down either. So this could actually have a little bit more to come down before we see a bit more volume come through down around this level again, maybe a little bit higher. If you're expecting utilities to go up again, this around this level here would be a good level for it to bounce for a next leg up, which would probably signal the next leg down on the rest of the market. But the other thing to keep in mind is some of these sectors will still crash. If we get a major economic crash, these will still drop. It's not like there's unlimited money that utilities can actually make money, especially in a major recession. When people don't have money, they tend to not want to pay their electricity bills and other utilities. Geez, I wish this wouldn't refresh every time I open the page. XLP, so a couple of sweeps here, which is interesting. So this is staples, consumer staples. Obviously, it's dropped pretty hard recently, which suggests there is room for the market to go up right back into this big volume area. So whether this is, I mean, to me, that looks like a sweep before this pumps again, which actually would be more negative for the market in general. So just probably keep an eye on this one. If XLP starts outperforming the SPY, then it's probably leaning towards more downside in the markets. XLY, so consumer discretionary, it's had a decent few trades on it at a fairly big volume level. Again, moves back up into this sort of level here, wouldn't be out of the ordinary and would probably be expected, like a proper long-term retest of this level, which is a fairly key breakdown level, before further downside is likely in my opinion. Energy, it's just been going nuts with oil and the war and stuff like that. A little bit messy, but we did have the 14th largest trade on this in history, I believe that is, right at the top. So this is probably a lot of profit taking, to be honest, from the guys that got in here. But this little area here, there would have been some trades getting ready for the next pump, but there is probably a fair bit of profit taking at the moment. So energy is a tricky one. I'm not going to get too involved in that at the moment. I did have a little bit of oil that is going okay, but not a lot. So let's have a look at gold. Gold, I did kind of like this level. I didn't have a trade set there though, so I feel like I've kind of missed out on that one a little bit. But I had a funny feeling this is actually going to come back down even further. I think seeing gold around 3,500, 3,400 again wouldn't surprise me. Off the peak, that would only be 38, 40%. So that is entirely possible when we get financial crises, because the people that were hedging with gold start to sell their gold, and central banks can start to sell it to help support fiscal measures and things like that. Gold isn't something that necessarily has just an up only. Do expect a bounce there, and I do expect a general upwards momentum after that. But at the moment, this is looking for gold more like it was just at the start of the GFC. On the wrong chart to show you that, but I might show you that when we get down to it. Okay, for Bitcoin, this is the total crypto market cap versus the stable coins. And obviously we broke down below our bull market support line that we've had in there for a while. And that was interesting, actually. Why was that there? Ah, that would have been there originally. Yeah, should have been somewhere around there originally. Anyway, now we're still struggling with this, and there is one trend line here that I want to just point out. Sorry. So basically, this was the actual high of the market. See how it was a lower high on total crypto market cap versus stables? That's a dead set giveaway that that was a macro high. Haven't hit this trend line yet, and typically with Bitcoin, you do see it holding historical trend lines, and we want to see a breakout of that to suggest that Bitcoin's actually going to go up again. So this trading view seems to lose track of things a little bit over time. Let's just show what I'm talking about. Again, this was the previous high of the last cycle. As you can see, it was well below the other high. We are generally trending down. This is what I'm talking about. So this sort of marked the bottom of the markets. That there was the very bottom. And as you can see, this was building. So total crypto market cap versus stablecoins was actually building better than what Bitcoin was at this stage. And the FTX crash only brought it back into this level. Okay? And it was a retest of this previous trend line. So the fact that we came in, retested that, bounced off it twice, that was a really good sign that that was the macro low. Okay, that is kind of what I'm looking for the next cycle. We are not there yet, so I wouldn't be getting too excited about Bitcoin at the moment. Just keep an eye on this one, I would say. And what else? That's about it for that chart. So just over the NASDAQ futures, this is something I pointed out in the Discord channel. Basically, this channel here, it's been a pretty strong channel since the low of the GFC. And it got a little bit above it when people started to get a little bit excited, but it tended to always come back down towards the middle of it. We did get some strong bounces off the middle most of the way along, but big crashes like 2018 had a decent pullback, nearly got to the bottom of this channel. 2019, the COVID pullback, that got all the way to the bottom of this channel. The 2022 crash got to the bottom of this channel. And as you can see, even when they came through, there was always a bit of support, a bit of trading volume around the middle of this channel. So that's where we're at now. Do we bounce and we go back up to new all-time highs and back up to the top of this channel? I doubt it. There's too many structural issues at the moment, too many global geopolitical issues at the moment. We're at the end of housing cycles, like 16-year, 18-year cycles, stuff like that. Everything's sort of coming together at the moment for this to be a bigger crash. Do we stop here? About that 20,000 mark on NASDAQ? I actually don't think we do. Those that have been watching for a while know that I've probably got a bit of a bearish bias, but I have a funny feeling it's going to be more like this, where we actually break down, or even this one here, where we had a channel previously in the lead up to the GFC, and we actually broke down early March, sort of below that channel. We did sneak back into it, but the proper breakdown was actually the September 08, which was the start of the really big crash for the GFC. So again, just watch out for these long-term channels. I have a funny feeling this one will break down below it. This here, like, government stepped in and stuff like that to support the market. I have a funny feeling it's going to be more like this, which, let's have a look at the NDX. Where's that? Where are we? Just give a bearing, sorry. So the NASDAQ before 2021, sorry, before 2001, didn't have the same sort of channel. Let's have a look, see what we can draw in here. I don't think this is really applicable, but let's do it anyway. There was a bit of a channel there, I guess. The NASDAQ actually broke out above it, and look, that did go back a fair ways as well. I got to turn the magnet off. Damn it. Where are they? Something like that. It did go back a fair way, just general grinding up. Hit the bottom of it. What was that? 94. Hit the bottom of it in 1990. Did get a bit of a blow off top on it first. And obviously that was from 98 through. And 98 through was a crazy time. Like all the IPOs and stuff that were coming out in the lead up to this. So, but I guess the point here is that you can break down from these big channels and do so over a long time, and you can get a very long time before you actually, if you buy at the tops, before you actually make your money back. I'm not even going to be able to do that. When was it? I think it was about 15 years before the NASDAQ actually got back above its previous high. Yeah, horizontal. Let's do that. Somewhere around there. We pretty much hit it and formed resistance at it around November 15. Yeah, so pretty much 15 years. So try not to buy the top. Now's not a bad time to be taking some profit. I'm pretty much just in treasuries and bear market indices or bear market ETFs, and what else? Just, you know, interest-bearing stuff for the time being, just waiting for the next opportunity. I'm going to slowly start getting out of the bear market ETFs on the way down here, and start shifting it back into ETFs, but not a lot. Like as I said, I am expecting this lower trend line to break this time around. Okay, let's look at ES first, because that's where I've probably got most stuff. I haven't even done any TA on this for a little while, but yeah, it's kind of already broken down some key levels. Obviously, even NASDAQ was really, we're just retesting these breakdown levels at the moment. Again, it wouldn't surprise me to go a little bit further if we do. Hang on a sec. Just EMA. Sorry, SMA. Simple moving average. And we'll make that the 20. So we're retesting the 20 simple moving average, which has been resistance on the way down. I have a funny feeling though that we will probably get to the 50 moving average on this one. Maybe not straight away, but it would not surprise me to come all the way back up into these previous lows here, up around that 67.90 sort of level, 67.80 maybe by the time it happens. But that would look like a more likely point at which we would actually find the next leg down and be somewhere back down into that 6,000 level. And, you know, over towards end of June, that's potentially going to happen. It's not necessarily going to happen in the way that I just described. We could do something like this and then move around for a bit and then find our way down. And then, you know, there's going to be all sorts of trading volume around here, whatever's going on politically. And then we probably drop again. Okay. This is going to be a process. This is going to happen over the next year or two. It's going to be a trader's market, not an investor's market. Unless you're just looking to buy the bottoms, buy the dips. Just don't go all in on the first dip is my motto at the moment. Not financial advice, just the way I'm looking at the market. So we'll go straight to some of the ratios. So XLY, XLP, pretty sideways at the moment. Is this just a sideways before another drop? Another drop would mean consumer discretionary is underperforming staples, which would mean that market is likely to go down more. I don't think this is the end of this particular ratio. I think this will drop more. Again, whether we have hit the 50 SMA on this, but whether we drop straight away or whether we keep going sideways for a little bit, we'll have to wait and see. Depends a lot on the war. Seeing the interview with the Iranian leader the other day, Iran is not going to give up easily, I don't believe. And it's not necessarily because of the US. It's more they just don't seem to trust that Israel doesn't want to do anything but wipe them off the map. So, yeah, that's where that's at the moment, as far as I'm concerned. This here is an interesting little double top formation. That's probably a bit much, but you know, it could lead us down quite substantially from there. At the moment, that's all we've done. We've just retested this little neckline here, that previous low. We could come back up into this previous high, but this sort of zone, this zone in here is probably going to be a pretty big sort of volume zone. God damn, I need to turn that off. Right. I don't expect it to really get too much above that zone. If we break through and retest and move away, then markets could potentially keep going up. So that was the equal weight consumer discretionary versus the S&P 500. Another interesting chart here is XLY versus SPY. As you can see, it's at quite low levels compared to what it has been in recent history. So that's kind of bearish as far as I'm concerned. There's a bit of support potential around here. Again, I wouldn't expect much more than something like this, and then another leg down. I'd be wrong, but that's the way things seem to be shaping up. Consumer discretionary versus that's the same chart. What the? It should be RSPS, I think. Damn it. I just want to have a different chart there. Oh, I do. For some reason I had that twice. That's silly. Get rid of that. Okay, so consumer staples versus S&P 500. Get rid of that tool. This is what we thought a while ago. We might get a bit of head and shoulders, which would signal that dip. At the moment, though, we did get a bit of capitulation on this, and we found some support here. So decent level this is looking like it could be fairly substantial. Just looking back through history. What was that? That's the COVID high to the bottom of the markets through COVID. I suspect if we're hitting somewhere up around here, that could be a pretty decent bottom. But I kind of expect this to really go quite a bit further north than that. It'll be interesting if we break through this sort of level here. If we can push up, break through some of these levels, break through this descending trend line here, then I'd be looking at potentially a way bigger drop on markets and a fairly major financial crisis occurring at that time or about to occur. Not quite there yet. At the moment, it just looks like it's basing, but generally when this is basing, it's not a good thing for markets. So consumer discretionary and consumer staples. Consumer discretionary is still quite high, really. Like in terms of history, it's still pretty high. But you look at this and you think, well, okay, here's another channel. Where's my parallel channel? There. So if we do this, the channel forming there, we are below the middle at the moment. Yeah, it's potentially going to come back a bit more. So consumer discretionary doesn't look great at the moment. Still trending up. If we break down below this trend, then that's going to look quite bearish for markets. And I do believe that will happen this year or next year. Probably more towards the end of this year, given the way everything's going. Consumer staples, yeah, it's holding. Like that's why it looks okay against the SPY. But at the moment, it actually looks like it'll break down as well. So this breaking back down below this level here would generally, to me, suggest we're going into recession. Just because it's breaking major structure, and it'll probably still be outperforming SPY at that point. It'll probably drop slower, but yeah, it's kind of getting close to some pretty critical levels on markets at the moment. Real estate, so KRE. Sorry, that's regional banking, isn't it? Yeah, regional banking. Regional banking's held up surprisingly well. I don't know how this is doing it. It shouldn't be. There's some issues in regional banking. Look for it to break this trend line. That will probably lead to a pretty decent move similar to this, and general move down on markets. And if financials are struggling, then the markets will be struggling. Financials in general, still, that was a good level for a bounce. Will it get past this 50 and these previous lows? I doubt it. We'll have to wait and see. At the moment, it looks like we still will get a little bit of temporary relief, but I'm leaning towards finding resistance pretty quickly from those levels. This one here, so ITB is home builders or home construction. Sorry. Again, TradingView just moving shit on me. We've broken down from that trend line. It's not a super strong trend line, but if we come back up and retest that, we may not even do that, to be honest. Pretty clear break of that trend line with a fair bit of follow through. There is probably a bit of support here though, previous highs, previous lows. So yeah, maybe a little bit of a bounce, maybe on the news of holding rates or something like that, or on good home builder data, home construction data coming out. But again, I'm not really expecting it to make new all-time highs from here. So this is home builders. And yeah, same sort of deal. I'm not Not really liking what I'm looking at here. A lot of these things look like they're in Wyckoff distributions at the moment, or accumulations, but leaning towards distributions. So SMH, yeah, we did actually get more highs since. That kind of surprised me a little bit. I didn't really expect new highs. Haven't really been able to hold it though. Did retest, move away, new high, but it hasn't held that. It's looking pretty weak now. We are below the 50 EMA now, or SMA, sorry. And if that provides resistance, then I'd be looking for a move at least back down into 321, but probably more like 299, 300. Just major structure. But to be honest with you, even like back into this high volume area, this accumulation zone, back between 228, 262, I think we need to really hit that over the next 6 months to even consider having a reset on this market. DJT gold. So DJT is outperforming gold at the moment a little bit, back above this previous support. That's not super bearish. Generally, that's good for the markets, but gold's been kind of getting smacked as well. So the transport is actually performing okay. And that's surprising, especially given oil prices and stuff like that. There's something funny going on here. I don't know why Dow Jones Transport is going so well. Everything to me suggests that shouldn't be, so this is probably just a dead cat bounce. And look, it is hitting resistance, previous resistance, so I'll have to keep an eye on that one. DJI versus gold, on the other hand, so industrials has actually retested this many times and hasn't been able to break back through it, this key support. So that's quite a negative look for markets, especially since your next structure is kind of back in here, back into the 8 level. So I'm expecting another leg down on that. Maybe not straight away, but I don't think that doesn't look like it should take very long. Just looking at some of the repo facility stuff, it's still dropping. There's no major concerns there for me. Actually, looks like we could be starting to get into this sort of area, which was in the lead up to COVID. So, yeah, I mean, that's not great. Leading down the same way, it's suggesting there is some stress in the markets, financial markets in particular, credit markets. And we are dropping on that as well. So, yeah, I mean, these certainly aren't signs that we're in a bullish market at the moment. Overnight funding rate is dropping as well. So yeah, it's kind of, to me, it's not looking like, the start of the pumps in the good years, 2020, 2021. It is looking much more like the start of the bad times. Okay. So DJI, yeah. Baltic Dry Index, let's have a quick look at that. So this is like cost of shipping around the world, shipping containers and stuff. Actually looks like it's going up, which is inflationary, I guess. Maybe that's why the Dow Jones Transport's going up, because maybe they make more money when oil's high, diesel's high. I don't know. Haven't looked into that lately. This actually looks like it does want to go up. So that's potentially going to be inflationary, which isn't going to be great for markets. Sorry, that was probably hard to see on YouTube. The VIX. The VIX is something I wanted to mention because this has been a pretty good indicator that we're not out of the woods yet, because the VIX hasn't really come back from this upward trend. Realistically, having this sort of trend on VIX, we need to see a real spike and a real flush of the VIX. So like just a quick spike, bit of volatility, and then a move down or something like this. Oops. Tool. It's kind of what you want to see before you get capitulation and then the bottom of the market. Okay. It's pretty much what we've got every major drop, and realistically it looks kind of like we're here. So similar. VIX didn't really do much in the VIX actually spiked in the lead up to the 01 crises, but you know, staying high, like a VIX sitting above 15 for a long time isn't good. It looks more like we're in this sort of GFC pre-period where we had that just a consistent up move, some spikes, but it never really dropped back down, making a new lower low. And then we just had high volatility above that 15 level. And until we break back down below 15 and sit there for a little bit, it's not good in general. It is quite a bearish signal. So kind of where we're at the moment, we've been at or around or above 15 for a while now. This is a pretty high level to be sort of just getting some chop at. You did get a little bit over here as well, but yeah, this looks more like a build up to something bigger than it does just a quick dip, like a buy the dip type opportunity. I'm saying it's not a buy the dip opportunity, by the way, in case you're wondering. Skews stayed relatively high. It is still postured to the upside, so short term, yeah, maybe another little pump. But if this gets crushed, then I'd be watching that pretty closely. The VIX 1 day is the same sort of thing. It's still quite high. It has come up against some resistance here. If we break above that, then that's going to signal a pretty major bottom. Could just be a dead cat bounce, but if we flush on this as well, it's potentially signaling a decent buy opportunity, sort of short to medium term. Have a quick look at other markets. So DAX is struggling. Same sort of thing. It's just retesting back into key levels. It got hit pretty hard, and when the DAX is getting hit hard, got to kind of watch out because it is a fairly major market. Can be a bit of a bellwether for other markets as well. Again, just retesting this key breakdown levels. Chinese markets, same sort of thing. This was an interesting little run up here, actually. The fact that we didn't break to a new high here suggests we will actually come to a new low, at least in my opinion. UK 100 kind of looks stronger than most of the other markets, to be honest. Like, it did have a quick flush, but this was pumping when Wall Street wasn't, and that was something I was looking at going, what the hell's going on here? So UK market, for some reason, is looking reasonably attractive compared to the others. And I'm not 100% sure why. It does kind of look very blow off toppy as well still, so just be careful of that. But for the time being, it's not really in a spot where I would sell that. Japanese market, same sort of thing. So Japanese market has had a bit of money flow into it. Same with the South Korean market. South Korean market looks more like a blow off top, but I don't have that on this chart. Anyway, but it doesn't necessarily mean it's over. It could just mean that money's flowing into these other markets. Japanese interest rates were quite low, but they are talking about increasing them, so that will potentially bring more money back into the Japanese market. It's a kind of a tricky one, but this, in terms of this run up, it would actually be a good spot for the Japanese market to go kind of sideways and put in a bit of a distribution or another accumulation like this one. So expect some volatility with just general market volatility, but in general, it looks like people are running more towards Japanese and the UK markets as safe havens. TLT, again, we're just sitting around this bottom. It doesn't seem to want to break back down below this low here of 82, but it doesn't really want to break out either. So realistically, we need to see signs that interest rates will come down. And I think this looks like it's forming a base. And if this is forming a base and interest rates do come down, then this is likely to go nuts. And it means that the economy is going to be in trouble. I don't think interest rates dropping, I don't think it's going to be seen as good a sign for the economy as what people think. It's only going to really happen now when we see proper breaks in the economy. And I don't think central banks are going to really be able to support the economy too much. They're already doing it a little bit at the moment, but like in the background, there's a bit of money flowing into the markets from the Fed and stuff, but I don't think they're going to be able to sustain that to the level that's going to be required. High yield junk, again, it's interesting. High yield junk on this whole bull market never really got up to anywhere near the highs of 21 or 2020, early 2020 or 2017 or Jesus, like 14 or 13, 11. Yeah, high yield junk is suggesting that to me, that's suggesting we're at the end of a fairly major cycle here. The fact that we're just making lower highs on this the whole way through, it's a little sketchy. Retesting this level wouldn't surprise me again for the 50 EMA to come down to that level at the same time. It was a pretty major support resistance level. So if we get 79.96, I'd be looking, and maybe a little higher, I'd be looking for rejection. LQDIF, same sort of thing there. It's already sort of testing that 50 EMA. But again, just lower highs, not looking pretty. It's a very key level. It's been a major level for market tops for quite a while. Was it here? That's 07. So that's before the GFC. So we went sideways on this for quite a while before the GFC, and then it just fell off a cliff. So at the moment, if we're doing this, if we're doing basically a breakdown from a key level and a retest, if we break down whatever level we get to there, then I'd be looking at fairly major market break. I mean, we expand this, and yeah, it's kind of doing that. We had that February 22. That was that's a pretty decent time. Had it in 18 as well, which is interesting. And we had that. It just free fell from the previous levels in 2020. I don't expect that. I expect it more like a proper breakdown and potentially this sideways sort of thing. Something more like this. Okay, 2 year. So the market doesn't think that interest rates are going to come down soon, looking at this, but there's no real break from any major structure on the longer time periods at the moment. I mean, this is, if you're looking at it from a trader's perspective, you look at this as a dull market and you wouldn't actually short this market. But geez, if interest rates break above 5% and hold there, then it's not going to be good for the market, especially on the 30-year, but pretty much on any level, really. Any time period breaking above the 5% level, I think, would be pretty nasty for markets. All right. 2 years. 2 years actually at an interesting level. So 2 year actually looks like it wants to break down from this level more than the others. Yeah, that is interesting. Imagine coming back into zero interest rates again. How good would that be? You'd be buying a ton of stuff at that point. Probably get there, to be honest. So that's all they seem to have in their tool bag. It's not necessarily going to fix the market. So copper is actually holding quite high as well. So this is interesting to me. It could be a number of factors. Typically, Dr. Copper suggests that if copper's high, the market's going okay. It does look like a good breakdown level at the moment, same as all the other ones, but that's stayed surprisingly high while the market's been coming down, S&P and NASDAQ have been coming down, copper's actually been moving up. And that's been a general trend into metals, and that can be a bit of a defensive play as well. Metals have been pretty beaten down over the previous years. So this one here, what's that? Iron ore futures. Yeah, they're pretty beaten down. They seem to be basing. So iron ore could go okay, at least out of whatever we're coming into, but at the moment it's pressuring a breakout here. Yeah, pressuring it. I wouldn't say it's looking good at the moment. Uranium has had a secondary sort of spike and is working its way back down. Kind of expect that to continue down. Okay, so here's a more longer term gold chart. And what I wanted to look at was, yeah. So lead up to the GFC, gold kept spiking, and then pretty much once the GFC, or just really before the GFC started in a big way, let's just add price scale. So as you can see, the S&P 500 started to drop off. It started to sort of drop this level and come back up and retest it. And gold sort of spiked as the S&P bottomed on that temporary bottom before the dead cat bounce. And during that, gold came back. But gold kept coming back as markets went down, almost all the way to the bottom. So gold went from roughly, that didn't catch the spike, gold did a 28% drop then, a little bit higher. I think it was around 30% when you take the wicks into consideration, while the market dropped what did it drop overall from the same point? Let's do from this level. The market dropped 77%. And that is entirely possible again, to be honest. So yeah, but once we hit that, gold actually kept rising as markets were still really struggling. Like it took ages for markets to get confidence in the system until 2011, really, until we got that finally started really going up. And that's when gold actually peaked and started coming back down. So gold from that point. So from the bottom here, gold went another, let's say, roughly 171%. It's pretty good. And so it's not bad to buy gold towards the bottom as well when you're seeing capitulation in the market, just based on history. And then from the top to roughly the bottom again, came back another 44%. But you can see that's pretty much the previous high, or not even, didn't even come back all that way. So if we look at that same sort of thing here, we'd be looking at, let's ignore the top of the blow off top. Let's say 30% will get us back down just below this, little bit of structure. I think it'll come back a little bit more than that, but let's say we got back down into here, which I think would be about 44%, the total. Doesn't matter. Anyway, 170% from there would put gold at about 8,500, a little bit over. So they're kind of the targets over the next few years, really, for gold. Just something to think about. But yeah, gold, I think, will still keep coming back down if we get a little bounce on the S&P 500. And I'll be looking to get a little bit of it on the way down. Let's have a quick look at gold versus silver. Let's get rid of S&P 500. So silver versus gold. Silver's kind of underperforming still. So rather than, if you're interested in gold here, you'd probably better off being interested in silver at this stage. Just looking at that. But that's not a chart that really instills confidence just after a blow off top. A lot of volume here though through these levels. So that's actually, yeah, that's an interesting one. Quite a bit of volume picking up the lows on gold and silver. So when you start to see the volume spike as well as like a bit of volatility, they're generally pretty good spots for tops and bottoms. So I've been paying attention to that with a few things lately. So copper to gold is another one. It's at very low levels historically, just based on these indicators back to 2017 anyway. So, and it looks like it's actually retesting the 50 EMA. So you could get a bit of a spike in copper versus gold, which generally I'd think that would be more bullish for markets. But in general, the commodities are the ones that are really winning at the moment. I did call a drop the other day on oil. It did drop for a couple of seconds and then it went back up again. The fact we're getting so close to this, it actually looks like we're going to go higher again. And I have said for a while that we needed a spike in oil before we got really confident that there was going to be a major bear market put in. We are at a level now very similar to the bear market in 2022. I kind of expect us to go a little bit higher than that even before we blow off. Particularly around US oil, we're just at this previous high here, so it's okay to expect some resistance around this level. We have been above that before, up into the 147s before the GFC. So the fact that we're doing this coming into some financial concerns, very quick spike. I'd actually expect a bit more of a move up on this. Just depends whether we can get through these very important levels around this 112, 120, even 120. I think is the next real key. If we break that and confirm that to the upside, then markets are going to be looking pretty bad. Or it's not a bad time to be selling markets, I think, if they haven't already dropped. Same thing with UK oil, Dixie. So yeah, the Dixie's an interesting one. These VWAPs are just based on the crypto ones still. Just the timing of the anchor. I wouldn't. It's not a bad area to anchor it from anyway, but you know, Dixie coming up, it is trying to break out of this little bit of basing structure that we've had. If we do confirm a breakout on the Dixie, it's going to mean that people are probably moving into the US dollar as a hedge. And it has been the world's biggest hedge for a long time. So don't be surprised if that occurs. 102 is a pretty good target, as in the next level. Coming back into that level is going to be a pretty high volume level, I would think, as well. So between sort of 102 and 103, I'd be expecting a fair bit of resistance, and potentially the next leg down. Yeah, Aussie dollar versus Canadian dollar is actually going okay. Aussie versus the US is going not too bad. This is what we had happen in the GFC as well. The Aussie dollar came through that pretty good. Doesn't go back far enough on this particular chart, but this one goes back a bit further. Yeah. So what do we get? Oh no, the Aussie dollar actually shut the bed after the GFC, but it rebounded really strongly up into parity, well, pretty close to parity fairly quickly, because commodities actually came out of that period pretty strong. And Australia is big on their commodities. Aussie dollar versus Thai baht's doing well, that's good. Now the Japanese versus the US dollar. So key level here for a Japanese yen. Provided a lot of support previously. I have a funny feeling this is going to bounce and the US dollar is actually going to come back. Let's see where the euro's at. Euro's a key support as well now. Now the euro's been doing pretty good against the US dollar, but it's coming back. It looks like it's just really a retest of a breakout of a key level, key zone. Like if you look at, let's do another rectangle. So if we look at basically this zone in here, it's a really highly traded zone, even back down into this level. There's something in there for the euro. It probably will pull back a little bit, which means the US dollar will potentially go up a little bit. So maybe the Japanese dollar, Japanese yen will come back down right into this level, which wouldn't surprise me. There's a bit of a gap, I think, there. Interesting volumes through here. I don't know how accurate that is, but yeah. Interesting if we get a little bit of a spike on US dollar, just to potentially bring markets down a bit more. Pullbacks on euro and Japanese yen into support, and then we move away. M1 money supply still increasing, but not as much as it was after COVID. M2 money supply is actually quite high. What I'm more interested in is global liquidity, and we're back below this fairly long trend line here. Couldn't break above this one, couldn't get back to new highs here against resistance. So at this stage, that's looking quite bearish. Just the liquidity is just not there in the markets. It is kind of above the key level at the moment at this particular point in time. Just reasonably highly traded level. We just do a horizontal line through roughly Let's do it. If we can pick a spot around there. So it is just above that. It's not looking strong at all. It looks like just a retest of a decent breakdown level. Probably not even that, to be honest. Just the 50 EMA. So Schiller home price index is still quite high, but it's not looking super strong at the moment for the US. So I think we are coming to the end of the cycle. Credit card balance is going through the roof. That's not a good sign. Typically that happens before drops. Or leading up into, where was that? Yeah, that was really close. It peaked sort of just after the drop started for the GFC. So that's a little bit concerning because that's a big run up. There's a lot of credit issues at the moment. Private credit, been a lot of issues recently, locking up people's funds, not allowing withdrawals, and talking big companies too. What's that one? Debt balance ratio, auto loans. Yeah, okay. So auto loans pretty high as well. Same sort of thing into the GFC, although they're just going nuts compared to the GFC. Aussie home price index, same sort of thing. It's still going spastic. I shouldn't use that term, but it's going just stupid levels. MFI. So percentage of stocks above the 50-day moving average. I was surprised we didn't really get lower than this on the 50-day. And this is where I think we will find some resistance eventually. So we've probably got another couple of days up, as I said, with other stuff, come back up more into this kind of level in here. Previous support, bit of support here. But before we find a macro bottom, I'd be expecting us to get down to a level somewhere down here. And that was the same thing in 25 in the drop. We got there very quickly in 2025 on that little pullback that we had. The pullback that we've had in markets has been pretty substantial, and we just haven't been dropping these levels. So that's what's leading me to believe that there's still more to come, and that we've maybe just hit a little bit of a dead cat bounce area. At the moment, it's not suggesting, like, you look at this, the Mag 7 is down hard, and probably, for the time being, they probably actually, let's just take it from there to there, whoops, there to there, and measure that down. It's measured out that pretty perfectly, to be honest. Is it surprising we got a bounce there? No. How high is the bounce going to go? Probably to the 50-day moving average, to be honest, wherever that is in a couple of days, which would be a good longer-term retest of this level too. So if you move it to more like a weekly, we may not have retested that level on the weekly. Yeah, so we kind of did there, I guess. But anyway, that's a little bit of a bounce here, probably back into this high even around the 23.16 level for this. Wouldn't surprise me. But then I think we'll be looking for, I don't think we'll be staying there very long, to be honest. Especially if oil breaks back to new highs, and if this war keeps going longer, which from what I'm hearing, it's potentially going to keep going longer. I don't think Iran's going to just roll over. Then, yeah, it's potentially going to come back down pretty quickly. Tesla's struggling on the weekly. Let's go back to the daily. It's just been grinding down. I think we're going to come back into this level, to be honest. 330 level. It's still looking pretty negative. lots of news coming out about SpaceX IPOs and stuff like that. I think once we hit a few IPOs, I think we need to see the IPOs first, and I think they'll be hitting around the time that we have sort of the dead cat bounce. So look for that area, and when we start to roll over from that point, that's when I'll be looking for more downside, to be honest. So Nvidia, geez, this thing's holding on for dear life. Another retest of the 50 maybe, but I mean that looks like it's just done a liquidity sweep, and we could go to new highs from here, but this is looking a lot like a distribution. So yeah, not looking great for Nvidia. Google's, geez, that's the same sort of thing, just coming back up to retest key levels. 50 EMA. It doesn't have to do that either. Like 50 EMA didn't get retested on this breakdown, but it's struggling at the moment to get back through these previous lows. So Google's not looking great. Microsoft's looking dead. And I don't blame people for selling out of Microsoft, to be honest. I've used it for, what, 30-something years. And I think, to be honest, they've kind of really dropped the ball with AI. Yeah, I'm looking to move kind of away from them for a lot of work stuff. They charge way too much for storage, all sorts of stuff. So yeah, probably a little bounce here, same as everything else, but Microsoft's not looking good at all. The only thing here is this big gap. So whether we get that dead cat bounce soonish and we go sort of work our way back up into this level here and sort of close the gap over time before we get another big drop, that could just be the way Microsoft looks into the future, unless they come out with something that brings them back into the game in terms of software. I think that's how Microsoft's going to go over time. Just the AI era is going to need different operating systems. AI is going to probably be your operating system for a lot of stuff. It'll take a long time to transition everything over, but that's why I think it's going to be a slow death for Microsoft unless they can actually pick up their game and buy into the things they need to buy into. ArcK is an interesting one. So onto the bottom of this channel, this has been a pretty important channel for a long time, ever since the drop. And yeah, I think, again, this is a good spot for a little bit of a bounce on ArcK, get people excited again, maybe a little bit lower on this one first, but you would expect a bounce reasonably soon after 3 decent legs down. Apple, been looking pretty bad. That's not a great chart at all. People will be looking at that as potential head and shoulders. I think that's going to be a key level. I think what you'll probably get here is, if this is a head and shoulders, you'll probably get a move down, bounce from that point into the neckline, and then you'll get a move down. And that move will be something like into this bottom area here, which would make a lot of sense. Potentially even a bit lower, potentially into basically 200 even. Good number for retail to start buying back in. And unfortunately, I think Apple's kind of going the same way as Microsoft. Honestly, their tech's rubbish compared to the price of it. The only thing that's saving it at the moment is the Mac Minis are handy for AI. But honestly, consumer grade AI and buying hardware for that is going to change a fair bit in the future, I think. And yeah, I just don't necessarily, at the moment, I'm not seeing anything come out of Apple that fills me with confidence that I'd actually be buying the dips on it, to be honest. Triple M suggesting that we are going into more of a structural bear market, as far as I'm concerned. These guys do everything, like everything's sticky and like just industrial construction related stuff. They're in everything. So I do look at them as a bit of an indicator for what might be going on. And at the moment, they're indicating to me that we're potentially going into more of a bear market, like this sort of thing here. Same deal. Once they start to show signs of a bottom, then you're probably, that's when you'd be looking to buy back in. Amazon. Oh, that's actually a pretty nasty breakdown. Like if you put that where it should be, somewhere around there, that's a pretty nasty breakdown of that trend line and a retest. And we're just testing the 50 EMA at the moment. Everything's pointing towards that could be a pretty substantial break. And you're probably going to be measuring this off as, I would actually say, something down into this structure here as a minimum, like as a decent macro move down back into 139. And that's more of a sign of the overall economy and the consumer, as far as I'm concerned, than it is the fact that Amazon's not worth anything or anything. I think it's just literally people won't be buying as much, so they won't be making as much money. Meta, same sort of thing. It's looking like dog's balls. Not something you want to be buying right now, I don't think. Meta's kind of trying to keep up with the AI stuff, but yeah, I'd be looking at, that's probably going to be a pretty good upper limit there. And that's probably, we've already broken down on Meta really. It's broken down a number of different trend lines. You could even move one in here. It's broken down that one as well. So maybe a retest, little bounce on Meta, but again, it's not looking good. Airbnb, I still think this is not a bad buy, especially if it drops with the economy. I think Airbnb is just such a good business model moving into the future, especially if AI can look for you and give you recommendations and stuff like that. AMD, yeah, maybe a little jump. Some of these guys are still going to be pretty good stocks into the future. Like chips, we're always going to need chips. There are some chip manufacturers that are startups at the moment that are potentially going to disrupt the market, and like some pretty big disruptions. But who was it? Nvidia just bought one of them. They bought Grok. They had pretty good tech for AI in particular. But there are some others coming out as well. So particularly around the memory side of things, SanDisk might get a little bit of a shake up. SMCI's not looking great. Again, move up to close this gap and then another leg down. And that, like, if that happens, that's probably going to drag most of the chip guys down with it. I would expect. SML though, man, that's looking quite good as well. TSM, yeah, see TSM still looking okay. AVGO, AMD, they're not looking too bad, but still think they potentially be better value in a little bit. Stellantis, oof, yeah, that drop there just tells you it's good support. would have been a great level to buy off that level. I don't, like, yeah, maybe we'll close this gap if someone comes in and says we're dropping interest rates or something, but there's no need to close gaps on smaller stocks. They certainly don't have to close anytime soon. This is not one that I'd be buying. Then, as far as I'm aware, they don't have a lot of brands that would really compete in an electrified market at the moment. I can tell you now, it's pretty good having an electric car in at the moment the way the oil market is going. The Australian market, just a quick look at that. Yeah, it's not looking great. Looks like it's just retesting some key levels. Again, probably go a little bit higher still. Not surprised we got a bit of a sell-off. Problem with the Australian market going into a long weekend is the US market's got another day in it. So people sort of need to get rid of positions that are potentially high risk and worth nothing when they come back from holidays. But yeah, it's not looking great for most of these. That one's a little bit stronger. So what's that one again? That's financials, I think. Yeah, financials. This one's resources. So resources is still going strong. And maybe a bit of a pullback, but might not get much more than that. I'm surprised it didn't pull back more into this level, but at the moment it's retested this previous high back here from 2022, early 2022. So yeah, that's a tricky one. Not really a buy position at the moment for that one, but it does support the suggestion that resources and commodities are going to be probably king for a little while, and not necessarily they'll go up, but just they won't come down as much as others. I think that's about all I wanted to do today. This is a volatility index for Bitcoin, and it's interesting that we're making higher highs here. It is dropping a little bit at the moment, which realistically, what's that? Let's just overlay Bitcoin on that. Scale. Okay, so the fact that this is dropping could mean that we've just got a bit more sideways and up to go yet, which would kind of support the rest of the market having a little bit more upside as well. But yeah, the fact that we're making higher lows here, kind of, if we make another higher low, that's probably going to lead to a pretty decent drop. But it works both ways. As you can see here, volatility is directionless. You can get it in both ways. So, if the move's up, volatility still spikes. You just got to be a bit careful. The fact that it's coming down means just getting ready for another big move at the moment. What else? Have a quick look at Litecoin. What's it doing? BTC again. Yeah, Litecoin's in the toilet. What about Sol? Sol is in the toilet. Big volume area for Sol as well. Below the previous VWAPs. Generally, that's not a great sign. Kind of want to see it get above that before you get too excited and confirm above it. But it's interesting that VWAPs come into the same level from the high and the lows. So it shows you it's a reasonable value level, but not necessarily a bottom level. XRP. And I told so many people up here that XRP was not not likely to look good for much longer. Tends to be the boomers that are in Thailand that invest in crypto. A lot of them own XRP and they just rave about it. Fair enough, they made money out of it. She's pretty volatile. Sui is an interesting one. It's almost recovered this whole week. I think most of them will still, so Sui's probably got another leg down still. It's not a bad one. That one had a bit of news recently where someone selected it for something like a MasterCard, or someone selected to use it either as real world assets or as a stablecoin platform or something for like more mainstream stuff is what I'm trying to get at. Hyperliquid, this is still a pretty good one. Hyperliquid as an exchange is probably one of the better decentralized exchanges. And I think coming into next cycle, I probably want to hold some of this. I'm not buying it yet though. I might be wrong, but I want to see the rest of the market come down first, I think. Yeah, a lot of these other ones. Oh, Tron was the other one. I'm actually going to move Tron up. So Tron's been going on a bit of a tear. Hasn't really dropped much at all since Bitcoin dropped. I mean, that's probably still 40% or something, but in terms of overall structure, it looks pretty good. It's only about 25 or so. That's one of the better ones, one of the better coins all up at the moment. So maybe a little bit of pullback back into this VWAP. I'd be interested. But again, it just depends why this is going up and what's triggering it. Might look into it a little bit more. Tom, yeah, trash. This is an unfortunate one too. It's like trash. This is one that I'm interested in as well for the longer term. It seems to hold this level pretty well. I think it is a quantum resistant chain already, and I do think some people are building on it that potentially make it of interest. Near is holding the lows, but it's another interesting one. Most of these. Pendle's turned to poo. What else? Supra was a big one for a little while, and it's dead. Maybe next cycle. Supra put so much effort into their ecosystem. I'd be surprised if someone didn't start using it. This one, Lingo, holy crap. It's basically gone to zero at one stage. Back up, but I think this will find a bottom if they can keep it going and actually deploy it as a loyalty system somewhere. It's an interesting one where you get it's tied into real estate, and you get like not coins, but you get the ability to go into raffles and stuff like that just by staking coins and things. So yeah, it's an interesting one, but this was a darling of the gaming era, and it's trash. Gaming is pretty dead in terms of crypto. There are still some good projects and could be very interesting coming into the next cycle. Beam is an interesting one. The ones that I'll be watching, obviously I've got some bites, but holy crap, it would have been good to pick them up for next to nothing. Yeah, some of these, not necessarily Sol or Pengu, but certainly IMX is an interesting one as an infrastructure type play. Ape Chain, oh geez, man, that's been deserted. What was the other one? Frick, I can't think of it. be one of these ones down here. Must have been a good one. XLM. XLM had. It's an interesting one too. It's putting in higher lows still on the macro, so this is an interesting one for me and at an interesting level. It was started by the guys that started, or one of the guys that started XRP. And so the contacts are there in the financial system, and it is being used at the moment in the financial system. It's the one I was trying to think of. Sorry, this is making the video go longer than normal, but I really wanted to point it out, and I can't remember. No, I've forgotten. Yeah. Damn it. I'll try and figure it out for the next time I'm on, which probably won't be for a little while. I've got a lot of stuff coming up. I'm actually having a holiday for a change next week. Oh, crap. That's really annoying me now. Yeah. It was an actual game. Shrapnel. They're still building it. I believe if they can deliver on what they're trying to build, there's that. And there's a couple other ones they're still building and had plenty of funding. So they may come out of this pretty good if they can survive long enough to get to market and survive whatever downturn we're going into. Let's just look at cryptos. That's it there, I think. Yeah, it's all about. Interestingly, it's sitting above its previous low here. So, oh no, duh. I'm overlaying shrapnel on XLM. Nah, shrapnel's looking pretty dead at the moment. But again, if they can come out with a game that actually is playable and can earn people money as they're playing and is fun, like it's a first-person shooter game, then some of these could actually go all right. It's just keeping an eye on them is going to be tricky. Anyway, all right, I think that'll do for today. If you got this far, congrats. You are probably sound asleep. Hope you have a good sleep, and I will talk to you next time.